Mm.
Good afternoon,
Yeah,
everyone.
okay. Okay.
Uh, Good afternoon, everyone, and Happy New Year. We are delighted and excited that you are able to join us today. Our speaker is online, and good afternoon,
Yeah,
everyone.
okay. Okay.
Good afternoon. Dr. Monday Audu.
Uh,
Good afternoon, everyone, and can you hear us? Dr. Monday, can you hear
yes,
us? Okay, awesome, awesome. So
yes, please.
very soon we'll read your biography. I'll just give a small welcome talk. But I would just want to plead with everybody to give us another 3 minutes so we can get more members joining, so we don't get people to lose the introductory part of your presentation. So we'll just wait another 3 minutes. Then I'll give my welcome talk, and then Ada would read the bio of the speaker. Afterward, we get our speakers, and then we can members are encouraged to drop their questions so they don't forget in the chat. Secretariat will take note of that, and then after the speaker has is done with his presentation, we can now take a question and answer session. That's like the plan for the event. So once again, thank you all. We are happy that you are here. It's a good way to start the year. And then I'm sure every minute of today's engagement will be worthwhile, not just for you as an individual, but for your whole architectural practice. Thank you. So we'll just wait another 1 minute and then we'll start. Okay, can everybody hear me? Can you hear me?
Yes, we can. We can hear you.
Okay, thank you very, very much. I want to welcome everyone member of our chapter, recognizing all the fellows of the Institute here present, the members of the executive committee of our chapter, senior architects, our colleagues, uh, gentlemen and ladies of NI Lagos State chapter. It is with a sense of gratitude to Almighty God and a deep respect for our noble profession that I welcome you all into this first meeting of the Lagos State chapter for year 2026. 2025 was a very, very remarkable year as per achievements for our beloved chapter, and we look forward to greater achievements in this new year uh, that we are about to fully engage with. As we stand at the threshold of a new year, energized by the resilience of our chapter to adopt to new rules and government policies, as the case may be. As much as we try and strive to shape the skyline of our city, the city of Atlantic splendor, despite all the shifts in sands of our economic landscape, we have to try as much as possible to play within the policies and the government laws as it affects our practice. Our theme for today, the Nigerian tax system and its effect on SMEs. It's very timely. It's urgent because as of January 1st, 2026, we are fully transitioned into a new fiscal year under the Nigerian Tax Act of 2025. For many of us running small and medium-sized architectural firms, these reforms represent a strategic reset. We are no longer operating in the era of fragmented statutes. The consolidation of 11 outdated laws into a harmonized regime brings both a promise to clarity and the weight of new responsibilities. The ESCO, would like the chapter to understand this system as it directly impacts on our practice. And our profession is one of precision. We do not bring buildings based on guesswork. We use data, physics and arts, science and arts. We apply the same precision to our financial compliance. I want to urge all of us to listen attentively to this astute speaker that we have carefully selected. The General Secretary will be reading his bio. I'm sure he will home on issues about us digitalizing our operations, need for us to stay informed, and most importantly, need for us to support each other. Colleagues, the 2026 tax reform is designed to move us towards a practicable fiscal environment, which might change, which will allow us, to embrace the change, not with apprehension, but with proper knowledge of what the laws is supposed to do. It provides an opportunity for us to build more sustainable, transparent, and bankable architectural businesses. Let us use this year to not only design structures that inspire, but to build firms that are robust and compliant with policies, with government policies. I wish us all a productive meeting and a very, very prosperous 2026. Thank you all for listening, and over to you, General Secretary.
Thank you very much. Our chairman, we'll be having our first CPDP for the year is going to be delivered by Dr. Monday Audu, PhD, FCA, FCTI, ACS. Dr. Monday Audu Atadoga is a tax administrator with over a decade experience. He holds esteemed professional certifications, including Fellow of the Chartered Institute of Taxation of Nigeria, CITN, and Fellow of the Institute of Chartered Accountants of Nigeria, ICANN, as well as an associate member of the Chartered Institute of Stockbrokers. Currently, he is a senior manager with the Nigeria Revenue Services. Dr. Audu's academic pursuits focus on taxation, accounting, and governance. He is driven by a passion for improvement and excellence, encapsulated in his mantra, believe you can, and you're halfway there. Thank you very much for honoring our invitation, Dr. Audu.
Thank you. Thank you very much, our General Secretary, Adako. And good evening, everyone. I hope you can all hear me. Hello?
Yes, we can, please. Yes, we can.
Okay. First of all, I want to thank the leadership of the institute for considering me worthy to take this session. I I do not take it for granted at all. Architecture is actually something very interesting to me. So in my family, we have a younger brother who is an architect. So I feel I'm also in a family meeting. So once again, I'd like to welcome everyone to this meeting, and let's see what we can do in the next 40 minutes, 1 hour. Okay. Let's see.
Okay, I think we should let you share your screen
Yeah.
instead.
Okay,
Yes.
yeah. So I'm actually sharing. I'm trying to share. Can you see my screen now?
Yes, we can, please. Do carry on.
Okay. So I've been asked to speak on the Nigerian tax system and its effect on small and medium scale enterprises. So I must quickly say that everything I'm putting out today are purely from my professional perspective, and I'm not presenting the NRS. I hope that's clear to all of us because I'm sure that this is being live streamed. Okay, so we'll quickly run through because the slides they are a bit much, but we'll quickly run through it and take questions and answer as much as possible. Okay, so the Nigerian tax system and the effect it has on the SMEs. While preparing the slides, I decided to look at it from the angle of the reform just carried out by the Nigerian Revenue Service, because the reform looked completely at the tax architecture of Nigeria. Yes, let me borrow your term a bit. So he looked at the entire framework, reviewed it, and produced a new document or a set of documents, about 4 of them, uh, that can be guidance and law in the administration of tax in Nigeria. Okay, so what's the objective of this session? At the end of the session, participants will be able to understand the Nigerian tax system, identify key highlights and objectives of the 2025 tax reform, then recognize how the new regulation affects small and medium scale businesses, then identify practical steps entrepreneurs like you people can take to ensure there is compliance and also to avoid penalties. Okay, because there are lots of them. All right, but I must say quickly that the penalties and even the entire reform is actually not meant to scare anybody. We've had to deal with a lot of negative publicity in the public space, especially social media space, okay, of the intent of the tax reform. All right. But I must say clearly that the intention of the tax reform is actually to ensure that small business owners, okay, are put in a position where businesses can be easy, okay, where they have more cash flow to do their businesses, and as a result, give back to the economy and make the economy buoyant for everyone. Okay, so as a matter of fact, small businesses are meant to be better off, not just meant to be better, but they're actually going to be better off as a result of the reform. Okay, so I've said earlier that the reform is a comprehensive overhaul of the country tax system. And as we are aware, it took effect from 1st January 2026. And what are the laws that were produced? The first is the Nigerian Tax Act, then the Nigerian Tax Administration Act, Nigerian Revenue Service Establishment Act, and the Joint Revenue Board Act. Okay, so this is going to reshape the way individuals and businesses are going to be taxed henceforth. And now, why the SME is important in the country? Now, statistics shows that SMEs account for 48% of Nigerian GDP, as well as 80% of the jobs in Nigeria. Now, 80% of the jobs in Nigeria is actually very critical to the economy. Because if you are in a country where those who are out of jobs don't get stipends for survival, then all of those who are working are going to be providing the stipends for those who are out of jobs. So if 80% represent SME, then SME is a critical part. And I think that is why the government of Nigeria, took all the pains to go through this rigorous process of producing this tax document. Okay, so why the reform? We've mentioned some of the issues, and here we can see that we have had serious issues of multiple taxes, then multiple tax collecting agencies, complex tax rule, inefficient tax reform system, okay, investment unfriendly tax system, then low voluntary tax compliance rate. We all know that Nigeria as a country operate what we call the self-assessment regime, which means you are supposed to, look at your transactions for a fiscal year, usually 12 months, assess yourself, and pay what you think is due to the government. But there've been a lot of, or there have been low compliance, to that voluntary tax or of self-assessment regime. Okay, there've also been limited opportunity to deploy technology for tax because the laws that were just repealed last year did not really support this. Okay, and government is actually looking at opportunities to also increase the yield that comes from tax. All right, so all of this makes it very important for this reform to take place. So as we move on, we're going to see some of these things as provided for in the tax law. So evolution of tax reform in Nigeria. The present stamp duties, for example, okay, the one that was just repealed was last reviewed in 1903. Okay, so you'll see things like kobos and all of that, which amount doesn't make much meaning in the present day economy. So petroleum profit tax was 1959. Okay, personal income tax 1961, capital gain tax 1967. Then the FIRS granted staffing and funding autonomy in 2007. VAT is 1993 until we're now having this reform. Okay, I will also add that it has also come to, it's been in the public space too that there are possible gaps, there are possible errors, right? But for why not attempting to speak for government, but for the quantum of work that was done, there could be one or two, issues that the management of NRS may want to, look into. as we speak, I know that about 20 guidelines are in the works, which when they are communicated officially will address some of the issues that we are saying. Okay, so what are the key changes? We want to quickly look at this because as entrepreneurs, I'm sure that many of us here, many of the businesses, we have staff, okay? And we also, in fact, as a matter of fact, many of us will have to pay personal income tax, okay? But before then, before I talk about this, one of the major change that has taken place is that three major tax types, okay? The company income tax, the personal income tax, and the capital gain tax have now all been combined and consolidated to now be known as income tax. Okay, so this is what one of the major things that have happened. So there's this consolidation, and so it's easy to assess, it's easy to understand. So we want to look at the income tax. All right. So there's exemption now for low income earners. So individuals with annual taxable income up to 800,000 will now be taxed at 0%. So, and the tax is now more progressive. Okay. Before now, we had like a regressive tax rate. Okay. The poor, where the poor tend to pay more than the rich. But now, the higher you earn, the more tax you pay. And that's the explanation of progressive tax. Okay, I think I've been talking and talking. Can we even hear me?
Yes, we can. Please carry on.
Okay, am I making meaning? I wish I could be seeing our faces.
Yes, yes, please.
Okay, all right. Thank you. Thanks
We're
for
also
that.
noting our questions for you, so just go ahead and present,
Oh,
and
okay,
then we'll be able to drop those questions and talk more when you're done.
okay,
So we don't interject
okay,
or
that's
disturb
fine.
your flow.
Okay. So the marginal rate is now between 25% or is averagely 25% from the previous 24%. Okay. There's also the issue of a residency rule, which has now become clarified. So if you have done 183 days in the country, or you have a permanent home economic tie, which is going to be used to determine your global income. Okay, so digital virtual asset gains, prizes, grants, non-traditional income sources are now included. So the tax base has now been increased. So the things that were missed out before have now been documented. Okay, presumptive taxation, where income can be ascertained or records, or income cannot be ascertained or records were not kept. So section 29 of the NTA, which is the Nigerian Tax Act, will take care of that. Then capital gains for individuals are also taxed at progressive PIT rate instead of flat rate. So this is the tax table. What we had before is this. The first 300, this is how your personal income, in this case, your pay as you earn and the direct taxes. This is how they were taxed before now. Your first 300 at 7%, the next 300 at 11, next 500 at 15. Then once it's above 3.2 million, will be taxed at 24%. So on the for the new income tax law, you can see that the first 800,000 is taxed at 0%. It's not like it's exempted, but it's taxed at 0%. Then the next 2.2, okay, is 15%. Then above 50 million, you have 25%. So you can try. I'm sure most of us have tried. If you have put your income in the tax table, there are a lot of calculators. If you go to the FIRS social media handle, you will see a tax calculator there. So you can put in what you earn, and you see that your tax now is actually, it's a bit less than what it was last year. All right. I think you're also going to notice it by the time your payslip for January is made available to you. So corporate income tax for the companies. So small businesses are now exempt from corporate income tax. Small companies are defined as companies with annual gross turnover of 100 million, previously 25 million and below, and assets not exceeding 250 million. Okay, so there's a dual rate of 0% and 30% as seen in section 58 of the Nigerian Tax Act. So what this means is that before now, if your turnover, annual turnover, for all your transactions for the year is 25 million or less, you pay zero tax. But this has been moved on, even though at the moment we have a bit of disagreement within the tax law, which is somewhat what we call gaps. So there's a 50 million and there's 100 million. But the chairman of the Presidential Committee on the Reform has said that the intention of the law was actually 100 million. Okay, so but when you look at where this 100 million is at the moment, it relates to the issue of VAT. Okay, so what will be the requirement to either file or not file is for VAT. But when it comes to small company, it stands at 50 million. I hope we do understand that. Okay, maybe when we get to questions. So there is no longer a medium tax rate. So it's 0% and it's 30%. Then there's establishment of the tax ombudsman, right? Which is going to stand as a go-between between the taxpayer and the tax authority, even before going to court. So it is when the issues are not being able to be resolved that you can move forward. But most times we believe that this body will be able to resolve issues. Okay. So what else has happened? If you are supposed to there are penalties for late filing, which attracts 100,000 for the first month and 50,000 months after. Okay. Then we now have what we call global minimum tax, which is now 15% minimum tax. So what has happened in the law is that the minimum tax has been repealed. What we call minimum tax is that if you said you did not make any profit or income for a particular year of assessment, the law provides that 0.5% of your turnover is taxed. And there's been a lot of pain expressed by taxpayers that this is taxation of capital. You are taxing the seed and not the fruit. So one of the very important things that the reform has done is to put that away. So large multinationals are the ones that are to pay this global minimum tax, or we call it effective rate of 15%. So since we're addressing SMEs today, I don't think it affects us. All right. Then 5 million naira fine for contracting unregistered parties. So when you give contract to parties or tax or to companies that are not registered for tax, the fine is 5 million. Okay, so this is supposed to to discourage doing business with people that are evading tax. Okay, then information to be delivered by bankers, individuals cumulative of 25 million. If you do transactions individual, the bank may report you or not report you, may report such transactions, okay, to NRS and corporate organization for 100 million a month. Okay, so there's now inclusion of digital virtual asset gains um, in the new provision. Then there is what we call economic development incentive, which is a 5% credit or tax credit on qualifying capital expenditure up to 5 years. So there's what we call the priority sector for the purpose of economic development. So um, before now, we have what we call pioneer industries, okay, that enjoy incentives. Okay, so there's now a new chapter that covers this economic development incentive. So once you qualify for it, you get it, all right, which is up to 5 years, and it's 5%, tax credits per annum. So for companies, tax on chargeable gains increases from 10% to 30%. It used to be 10% before, but now it's been moved up to 30%, which aligns with the company income tax rate. Then a list of assets subject to CGT is broadened to include cryptocurrencies and the rest of them. Then sales proceeds below 150 million in a 12-month period with gain less than 10% are exempt. So you can see that even with this new provision to tax capital gains or at 30%, if that sales proceed is below 150 million, okay, within 12 months, and the gain is less than 10 million, you are also exempted from that tax. And that is why we say that these kinds of transactions are transactions that relate to small businesses. So the tax reform actually considered small businesses. Okay, so let's look at VAT. Let's look at VAT. VAT remains at 7.5%. VAT is value-added tax. So businesses can now claim inputs on a broader base, not just on goods, but on services and fixed assets and capital expenditure. So before now, what we have is that you can only claim inputs on goods, but now services, professional services, you can claim inputs. If you have spent any money, if you paid VAT, okay, you can claim it back as input. All right. Then if you purchase fixed assets or you purchase capital expenditures or incur capital expenditures, you can get the input VAT charged on it. For example, when you import, um, an asset, you are normally charged VAT at the port, so you can claim this. Before, we only expense it. So input VAT claims must be made within 5 years of when VAT was incurred. However, note that VAT not paid at the port on imported goods and assets will not qualify for input VAT claims. Okay, so if you are charged VAT and you did not pay, you cannot claim it. Okay, you must show evidence. That's what that provision is saying. There is significantly expanded list of zero-rated goods and services. You have basic food items, they are zero-rated now, or they've always been zero-rated, but they are now properly expanded and documented. Educational materials, medical products, electricity, tuition, exported goods. Then VAT self-charge, okay, must be remitted on or before 14 days immediately after the month of transaction. So what is self-charge? Is a system of self-accounting. If somebody was supposed to charge you VAT and he failed to charge, the law says that you have to charge yourself and remit it within 14 days. and the rate is 7.5% only. All right. So other changes, VAT claims or VAT refund claim was made within 12 months. Then valid request for refund, the NRS must refund within 30 days after a tax audit. Then VAT or false VAT refund claims carry heavy penalties. So repayment plus 100% penalty of that falsehood plus interest and penalty. The reform introduced a revised tax revenue sharing formula between the federal, states, and local government. So we'll find that in section 8. And this is important because many of the states, because of, okay, I think when the reform was ongoing, one of the first issues that got to the media was on this VAT allocation sharing formula before it was finally agreed. So the states and the local government now have a larger proportion. So what else do we have from VAT? There's now mandatory e-invoicing for VAT registered businesses and sequential VAT invoice numbering must be specified. Then there is use of fiscal devices or system aligned with the Nigerian Revenue Service to improve real-time reporting. Okay, so for the purpose of monitoring VAT, the input and the output mechanism. So the service, maybe through some vendors, are going to provide fiscal devices that taxpayers will install on their system. Okay, any money you spend for doing that is an allowable expense. And there's a fine if it is installed and you refuse to use it or you bypass it. It's just like when NEPA, or not NEPA now, maybe Keja Disco install a meter for you and you try to bypass, there's penalty for it. I think it's to encourage transparency, accountability, and proper accounting. So non-resident suppliers, especially digital services, are required to register for VAT in Nigeria. Okay, well, we know our non-resident suppliers like Temu. Okay, if you patronize them, then especially digital services. So what are digital services? I think some of those that provide entertainment for us, like Netflix, yes, you have to register for VAT. Okay, then when inputs VAT exceed output, you can get a refund. Then the time of supply is earlier of invoice or receipt is issued or goods delivered or made available for use when payment is made or received. Okay, let's run over this. So we have quite a number of exemptions and reliefs. Okay, there are about 50 of them. So for the purpose of time, we'll not be looking at, we'll not be, discussing this, but there are items we can all look at. Okay. All right. So expansion is gratuity. We've talked about capital gain tax and the company income and all of that. Okay, so there's something I missed on talking about. So one of the innovation too of the reform, of the tax reform, is the introduction of what we call the development levy. The development level is 4% of accessible profit. Okay, and this came as a replacement for what we call earmarked taxes. Okay, so these earmarked taxes There are several of them that were being charged and computed, differently. One of them is the tertiary education tax. Then there's police trust fund levy. Okay, they were all taxed. So what the reform did was to merge everything and say, okay, instead of breaking everything into piecemeal, collect it just at once, then distribute it. And once the distribution goes like tertiary education trust fund takes 50% of the entire 4% of development levy. Then the Nigeria education loan is going to take 15% of this 4%. Um, we are we are very much aware of what the government is doing with education loan in the school. So the money is going to come from here. All right. Then there's a national cyber security fund of 5% and all of that. That's how the distribution uh, is going to be made. So, okay. So let's have this discussion. You can on your microphone if you can hear me so that I'm sure we are in the class. All right. So are children products vatable? Anybody, you can just speak and I will hear you. Children's products, are they vatable? Um,
We can hear you, sir, but most of us are architects here, so I don't know if we can actually relate to.
No, they're not. They're not vatable.
okay, okay.
Okay.
My bad. So
But go
let's
ahead, sir. We can hear you.
okay, so children products are not vatable. So all those pampers, all those diapers, they are not vatable. Then the question now came, is adult diaper, is it vatable? Because an adult is not a child. But again, medical products are viable, are not vatable. So adult diaper is a medical product. So that's what I wanted to bring out of that. Is water vatable? No, water is not vatable. All right. But if the water is sold in a cool hotel at 5,000 naira or 20,000, I think VAT will be charged on it. Okay. Then um, when the water is sparkling or is flavored water, is also vatable. All right. So we're looking at taxpayers' rights to information and education, right to privacy and confidentiality. So when you send your documents to the NRS, uh, there's a note of secrecy. They are going to keep it and make sure that they don't transfer it to a competing uh, business person or taxpayer. You have a right to fair assessment. You have a right to appeal. Then you have a right to a refund, of course, after a tax audit to be sure that you are not owing any taxes. All right. Okay, so that's your right. You have a right to information. Okay. And FIRS issues circulars from time to time. Okay, and they have social media accounts too. Okay, maybe by the end of the presentation, we will all find out how many of us are following NRS on the social media account. Okay, so what are taxpayers' responsibility? You are to register and file accurate tax returns, timely payment of taxes due, record keeping, compliance with tax laws, then cooperation with tax authorities. This cooperation is to, if you are writing a letter, you have a responsibility of responding. You don't just throw it away. Okay, if you are moving your address, your registered address, you have a responsibility of notifying the NRS. Okay. Uh, okay, so the responsibility continues. what's the dates of filing returns? Okay, because you are supposed to prepare your tax returns. Um, and it should be submitted 6 months after the company's accounting year end. So most companies' year end is 31st of December every year. But again, we have some businesses that have 31st March as year end. Okay. So example for deadlines. Um, for a companies that for a company that the year end is June 30th, 2025. Okay. Sorry, for a company that its year end is 31st December, right? Then the deadline for submission is June 30th, 2025. So what we are saying is that for 2024 accounts, you have up to 6 months to file the return. If not, you begin to pay penalty for late filing or not, or even for non-filing at all. Okay. Then for a March 31st year end, then by 30th of September, you have to file the returns by all means. Then for VAT and withholding tax, all right, the deadline is 21st day of the month following the transaction month. For example, for all the sales you made in January, you must send the assessment and payment by February 21st. All right. So these are list of penalties. There are a lot of them. I've just left them here so that we can look at them. Okay. Um, Failure to file returns. So there's administrative penalty of 100,000 for the first month, then 50,000 for each subsequent month. So there's failure to keep books, penalty 50,000, and 10,000 for individuals, 50,000 for companies. So we're expected to keep proper records. Okay. Then failure to register for tax. Penalty is 50,000 for the first month, 25,000 for each subsequent month in default. Then failure to deduct withholding tax. Administrative penalty of 40,000 of the amount not deducted. So I mentioned earlier of the fiscalization system, which is the fiscal device to be installed on our system to monitor transaction. So failure to use that fiscalization system, there's administrative penalty of 200,000 plus 100% of the tax due and an interest at the prevailing CBN MPR rates per annum. Okay, so and there are others here. I believe that the purpose of this session is for us to get acquainted with some of these provisions so that we can avoid them. All right. So in conclusion, the Nigerian tax system through the Nigerian Tax Act 2025 aim to create a simpler, fairer, and more inclusive tax system that works towards shared prosperity. Remember, we are not just taxpayer, but we are contributing to a better Nigeria. Thank you all for listening. And on this page, okay, I talked about this. This is the official handle on Instagram, FIRS_Nigeria. Then on X, we have official NRSNG on X. Okay, so as of today, on X, we have about 111,000. Then on Instagram, 111,000. Then on X, we have 193,000 followers. Why I needed to highlight this is because this is tax that everybody has been shouting about. Only 193,000 persons on X. So, but there are some content creators who are dancing and have like 15 million followers. So you can see that what we're having here today is quite interesting and quite important. many people are not really interested in tax. Okay, but there's a lot of information, which is one of the rights, of the taxpayer. There's a lot of information out there on this social media page that you can garner uh, information that you can use you know, for your tax uh, decision making. So once again, I want to thank you all for listening. I hope it has not been so boring. The past 30 to 40 minutes, I hope we gain one or two things. Thank you once again. So can listen to questions.
Thank you very much, Dr. Aldu, for your presentation. I believe we've picked a lot of things from this and gotten some clarity on the numerous gray areas we had with regards to tax and the new tax reform. Please, I would like people to send your questions in the question box. I have some that have come in, just a couple, and I'll go through that. But if you have additional questions, please type them in now. Thank you. I think the first question that I have here is from your presentation, does the first 800,000 naira, is it annual income or monthly salary?
The first 800
Yes.
is annual.
Okay. So then it also said, does it mean that small companies must always file?
Small companies sorry, I want to answer that properly.
Okay.
I want to answer that properly. Just a moment. Okay, small companies must file, and while they have to file, is because we need to know when you become a big company. We also need to know that you're actually a small company. All right. I would also like to know when you transition to being a big company. But when it comes to VAT, a small business do not have to file. Yes, that's the provision of the present tax law.
Okay. Thank you. There's another question. Most consultancy services firms register business name and not corporate entities. Are they judged as individuals with only 800,000 naira exemption or as companies?
Uh, Sorry, can I have that again?
Okay, sorry. I said most consultancy services firms register business names and not corporate entities. Are
Okay.
they judged as individuals with only 800,000 naira exemption or as companies?
Okay, so what happened is this. When the tax laws were coming out, a lot of people, there have been these debates, can we move to become companies or we should remain as business names? Okay, so whichever way it is, you will still pay tax. So the question is, are they judged as individuals? So business name are are taxed under personal income tax or is still under income tax. All right. Okay. So because it is the income to the owner that is taxed. I don't know if you understand that. While so you will still have the exemption of or the, the zero tax of 800. So that's how it's going to be taxed. All right.
Okay.
Because that goes to the states and not the state IRS and not the NRS.
Okay.
Yeah.
So the second question there is, how do you tax professional fees where tax was removed before the fee payment.
Okay, great. Now, when tax is removed before payment, tax is removed as withholding. So if you have registered for withholding tax, and withholding tax is actually an advance payment of tax. All right, it's an advance payment of tax. You are supposed to have a credit. So before now, if your if withholding tax is deducted at source, they give you a schedule. Maybe by the time they are paying you, they give you a schedule. Okay. And you can have credit note. But if you go on Tax Pro Max, if you have registered for tax, you can actually see that credit. It's part of this fiscalization of what the revenue service is doing. So you can actually have your credit. There's a credit note, which is that advance payment of tax that you are going to use in reducing the actual tax payment. So it's your money, it's not lost.
Okay, thank you.
I hope that's clear.
Yes.
Okay.
Then, as an individual with a registered business name, if I've not been paying tax previously, how can I start now?
Just go to a tax office and register. Remember, if your annual income is less than 100 million, okay, because you are talking about a business name now. So what brings you to the NRS will be VAT. But if your annual income is less than 100 million, then you don't need to register for VAT. But with the IRS, you need to submit your monthly, assessment for personal income tax and your direct taxes and payee. Yes.
Okay, I think we have more questions here.
Okay.
Said, to what extent does professional indemnity insurance offer tax benefits for SMEs in professional service?
Okay. Professional indemnity. I think insurance premium are allowable deductions, okay, from income. So you can use it to as a VAT deduction, sorry, as a tax deduction before uh, arriving at your total income on which tax will be charged.
Okay.
Yeah.
Okay, then there's a second one. It said, what other legal effective methods can one use to optimize corporate tax efficiency?
I'm trying to understand this English. Legal effective
Effective
method.
method.
Is
Yeah.
it when you have disagreement with an assessment from the tax authorities, or you are talking about tax planning? I don't quite get it. So if it's
Okay.
tax planning you are talking about, uh, uh, it's always important and you're advised to work with a tax consultant. Okay, so they will help you arrange your transactions, bring in all the expenses legally incurred. So they will stand as a deduction before you are assessed to tax. And if you are looking at legal methods, so once you have issues, disagreement with the revenue tax authority, we talked about the establishment of the tax home bond. So you take the matter to them for discussion, right? And where you cannot agree, there is the tax appeal tribunal, there is the high court, there is an appeal court. You can go as far as you want to go to get justice. I hope I answered that question, or you can further clarify it. Okay.
Okay. Yeah, and there's another question regarding business name being taxed as a person income tax. Will it be right that I want to assume it's successful, that a successful business is advised to upgrade to a limited maybe limited liability company if his income will be above 100 million?
Yes, it's advisable. It's advisable you upgrade, you move it to 100 million. And there are a lot of advantages, I would say, of a limited liability company over a business name. All right, you will appear like a business that have more structure, okay, that have more organization, okay. More people want to do business with you, and if it comes to financing from banks, I think you stand a better chance. So, and the turnover is not what is going to be taxed. It is the income after you have removed all expenses. Okay, before now, we say expenses that are wholly, reasonably, and exclusively and necessarily incurred with respect to the business. But now, every expense that is wholly for that business, every expense that is exclusive for that business is an allowable expense, section 20 of the NTA. And once you declare that, it is the actual income that is going to be taxed. So you can upgrade. There is no risk in playing at that level. Hello, are you there, Adaku?
Hello, yes, sorry, I'm there, but I think I missed I had some issues, so the chats have cleared. Toby, please take the remaining questions.
Okay, I think I can see the next question.
Okay, please.
For small businesses, going by what has been said here, it is critical for a proper accounting system to be set up for the business. Can you recommend an accounting system that is self-serving? Throw light to TIN as related to small business. Okay, that's another question. So without trying to advertise, so there is the Peachtree accounting software, but again, it does not run on its own. It might require uh, a human operator to navigate through it. So there's Peachtree, there's Sage Accounting, and a number of them. I hope I've answered that. So proper accounting is important. Proper record keeping is also important. But if you cannot even afford a software, you can do a normal T account and keep records of outgoings and incoming and make sure that you keep proper documentation. Either soft copy, create a folder on your system and keep every invoice and vouchers, or you print them and put them in a file so that if by reason the tax people come around, you can open your records to them. The point is to capture every transaction, okay, and to be able to defend it. All right. I hope that is answered.
Yes, please.
Then throw light on TIN as it relates to small business. So every taxable person is expected to have a tax identification number. And as a matter of fact, if you have NIN, you can have your TIN. We have seen the links that have been set out. So if we don't have it here, maybe I'll share it with Ada, who will share with us. So once you put in your NI, if you don't have a TIN as an individual, if you don't have TIN, if you can use your NIN to generate a TIN. And that's why it is said that you can use NIN as your TIN number. So I'm sure that I've answered both questions from Olusegun Babalola and Ibikunle Olaleko.
Thank you so much. for questions and for your um
Okay, there are more questions. So
okay, so
Yes, I was just about to say that there are more questions.
yes, there are more questions. So
We'll be glad, sir.
as a registered business name, when where I'm only paid for consultancy fee, at what threshold do I start paying and when am I exempted? Registered business name, when I'm only paid for consultancy fee, at what threshold do I start paying tax? So we have said for personal income tax, you are going to put in your annual fee on the tax table. All right. Then the first 800,000 is going to be taxed as zero. Okay. And all the other ones. So what we call why we call that 800,000, why is exempted is because it's close to the minimum wage. Minimum wage is 70,000. 70 times 12 is how much? Uh where is it? Okay, it's
840,000.
840. So what we are saying is that those any minimum wage should not pay any form of tax. Okay. So your consultancy fee as a business name, you put it on the tax table. But remember, you are going to also enjoy there are some exemptions that are allowed. Okay. I mentioned insurance premium earlier. There are other exemption. Okay. How do I handle my personal tax if a client send 130 million into my account for building a house? Yes, this is a good question. This money is not your consultancy fee. So it is actually for that project. So you must have an estimate of the cost of that building. And if you actually go for that building, then you must have invoices to support that estimate of how much you spent. Then the difference, maybe a building of 130 million, you spent 100 million and 30 million is your profit. Is that 30 million that will be taxed? But for the 100 million, you must have document to support it. You keep the document, everything you bought, the sand, the wood, make sure you get some form of invoice. Or if possible, even the transfers that you made, you can print receipts if you are not giving an invoice. Okay, you can print it. So by the time you surprise, sometimes you may even build at a loss. You were sent 130 million and you ended up spending 140 million. So you had a loss of 10 million. The law allows you that next year, when you do another project, you can carry that loss forward. Because this year that you have a loss of 10 million, you are not supposed to pay tax because you are not paying tax. You can't pay tax from a loss, you pay tax from income. So next year, if you now have 30 million in profit, instead of going ahead to pay tax on the 30 million, the law say that loss from last year, you can first remove it and now pay tax on 20 million. So you can see how beautiful and friendly our law is. Thank you.
Thank you very much. I believe those are all the questions.
Yeah, these are the questions. There's no other one here.
Okay. I don't know if the chairman has anything to say.
I have to just specially thank Dr. Audu. This is like bringing tax to ABC. It simplifies the whole gray area of, oh, what if I get money in my account? How do I, those basic questions that I have had in my head anyways, which has been addressed majorly. I want to thank you specially, and I hope that hopefully you can still share your presentation with us if you don't mind, so we can put up in our website for people to also download if they need it. Also, it would be good to maybe have your contact on that document, just in case any of our members require some form of contact with you or with your company, for us to be able to get more access, to you and professionals that can help us in this light. I know a lot of architectural firms have tax issues a lot. And because most of them use business name and they just feel like, oh, I'm just doing the business. But it's important, to the chapter for us to be able to open our eyes to the real opportunities that this tax system brings for us. I particularly like the fact that you just highlighted that even if you have a loss in a year, you can move it back next year, and that even reduces the profits. Architects are noble people and they are known for their integrity. So I believe that tax payments is one part of us showing the government that yes, we are able to comply with the tax system and the tax policies that the nation has. Thank you very much. We will not be able to recognize everybody on this call. So once again, I want to appreciate everyone for taking out time to join us. This month, we are not able to have the time out with Mr. President because at the date that we're supposed to have it, Mr. President is going to be in Senegal for a conference. And that includes him and the HGS. So we decided to take this call as our January meeting and move Mr. President's visit to our February meeting. We'll have another CPDP in the month of February. We'll be sending our information to you and hope to see you at the last Thursday of February at our secretariat for our maiden physical and hybrid meeting for 2026. Thank you very much, and God bless you all.
Thank you all so much.
Okay, thank you. Before I sign out, a last question came in. Somebody said if you don't keep proper records,
Yeah.
what signals the tax office and what happens? Okay, so this is it. What gives you out most of the time is your transactions. The service or the tax office have access to bank statements. Okay, so we have in financial intelligence. Okay, so they go through statements, and if you've heard Professor Taiwo Edele say it before, no tax administrator have the capacity to go after all taxpayers. So they look at the big ticket taxpayers. So if we are seeing that you are having 100 million transaction hitting your statement in a month, then we want to look and say, okay, what's going on there? Okay, so from your bank transaction, I remember also that the banks are required to give monthly or quarterly returns to the NRI. So there are a lot of ways to see what you are doing. Then also the people you provide service to. You provide service to bigger organizations, for example. So when we go there to visit them and we see where their money is going to, we may also the service may look for you too. So there are a lot of things you can't really hide. Okay, just do your bits. If you have earned 100 million, government is saying, or if you have earned 1 billion, government is saying, just give us a little part of it, just for the development of the country. That's all. Thank you very much, everyone.
I don't think that's too much to ask.
It's not too much.
Thank you, Doctor.
All right.
Thank you all very much. Take care, everyone. Bye.
Bye.
Bye. Thank you.